All right, so today we're diving deep into the world of crypto.
Specifically stablecoins.
Yeah, and this one is really making some waves.
Yeah.
It's called StableR Euro or
Uh,
URR,
mhm.
and we're going to be dissecting their white paper,
That's right.
which is basically their playbook, their in-depth look at what this thing is all about.
Yep.
And I got to say, this white paper is dense.
It is a little bit.
But don't worry, that's what we're here for.
We're going to break it
We're
down.
going to break it down. We're going to look at what UR is, how it works.
Exactly.
All the potential. And, of course,
Risks too.
the risks. Got to talk about those, too.
Absolutely.
So buckle up, everybody. This is going to be interesting.
Yeah. One of the things I find really fascinating about UR is that it's really trying to bridge the gap between traditional finance and
Yeah,
this kind of crazy world of crypto.
totally.
And unlike Bitcoin, which is, up and down all the time,
Oh, yeah.
UR is designed for stability.
Mm-hmm.
It's pegged 1-to-1 with the euro.
So 1 URR always equals 1 euro, regardless of what's happening in the rest of the crypto market.
Exactly.
So it's like having euros, but they're digital and they're on a blockchain.
Exactly. It's like having digital euros, but on the blockchain.
So if I trade 100 euros for 100 URR,
Yeah,
I can always trade them back for 100 euros,
that's right.
no matter what's happening with, Bitcoin or Ethereum or anything else.
Exactly. And speaking of blockchain, URR uses what's called distributed ledger technology,
Okay.
which is basically a public record.
Huh?
It's constantly being updated and verified by a network of computers.
Interesting.
Every transaction is recorded on this blockchain.
Okay.
So that means it's transparent and very difficult to manipulate.
Yeah, and that brings us to trust.
Right.
I think that's a really key point here.
Absolutely.
StableR is doing something that I haven't really seen a lot of other crypto companies do.
Yeah,
They're doing real-time proof of reserves.
that's a big one.
So it's basically like having a window into their vault.
Forgot.
And you can see that they actually have enough euros to back every single EUR that's out there.
Transparency is key.
It is.
Mm.
Because there's been a lot of incidents in the past where
Oh, yeah.
stablecoins
Yeah.
haven't lived up to their promises.
It's a trust issue.
Huge trust issue.
Big time.
But one thing that's important to note is that URR is not really targeted at like your everyday consumer.
Right. This is not for like you and me doing our daily shopping.
Exactly.
Yeah, this is aimed at the bigger players,
Yeah.
like market makers, exchanges,
Oh, wow.
brokers, asset managers.
Got it.
So they're looking for a stable and reliable tool
Mm-hmm.
for really large transactions.
Yeah, so it's like a specific niche within the crypto market that they're going after.
Exactly.
And speaking of specific niche, the fact that they're based in Malta and they're regulated by the Malta Financial Services Authority, I think that's a big deal.
It's a huge deal. It adds a lot of legitimacy. They have
Yeah.
to follow financial standards,
All right.
anti-money laundering regulations.
Mm-hmm.
It's a whole framework that's designed to promote trust and stability.
Yeah.
And that's really important when you're trying to attract these big institutional investors.
Yeah, because they are used to that regulated environment.
Exactly.
So it's like they're really trying to bridge that gap between the wild west of crypto and the
Traditional finance.
the more buttoned up world of
Exactly.
traditional finance.
Yeah.
But let's not forget, StableR, they've got big plans for EUR.
Oh, yeah. This is not just about, providing a stable asset.
Bigger than that.
They want to see UR used for all kinds of things.
Like what?
Well, faster and cheaper international payments.
Oh, wow.
Even underpinning the development of complex financial instruments.
Oh, wow. Now that's game changing.
Potentially, yeah.
Imagine if businesses could just send money across borders instantly
Like that.
with very, very low fees.
Yeah.
That would be amazing,
It would be huge.
especially for businesses that operate globally.
Yeah. Or imagine being able to build really sophisticated financial products.
Mm-hmm. Yeah. That are all based on a stable euro-backed foundation.
That's incredible.
It's pretty exciting.
But we got to remember,
Yeah.
there are risks.
Always risks.
The regulatory landscape for crypto, it's still evolving.
It's like the Wild West out there.
It really is.
Things could change.
Yeah,
And those changes could impact URR significantly.
absolutely. And, we've seen regulatory crackdowns on other crypto projects.
Oh, yeah.
So there's no guarantee that URR would be immune to that.
Nope.
And even though it's designed to be stable against the euro,
Right.
there are broader economic factors that could influence its value.
Absolutely. It's not completely isolated.
Right.
So that's why it's important to really understand how URR functions.
Okay, so let's get into the mechanics of it.
Let's do it.
Let's talk about how this thing actually works, starting with minting and burning.
All right. The magic of digital euros.
Yeah, I'm really curious to see how this all works.
Let's dive in. Okay, so let's say you want to get some EUR.
Okay.
You deposit euros with StablR.
They then mint an equivalent amount of UR and send it to your digital wallet.
So they're basically holding those euros in reserve.
Exactly. Those euros are held as reserves backing the newly minted UR.
So it's kind of like going to a bank and depositing cash.
Yeah, you got it.
And they give you a balance in your account.
Right, but in this case, it's all happening on the blockchain.
With URR.
With UR, yeah.
Okay, cool. So now let's say I have some URR.
Okay.
And I want to get my euros back.
That's when the burning comes in.
Burning.
Burning.
Okay.
So you want to exchange your URR back to euros.
Mhm.
You send those URR back to StablR.
Okay.
They destroy or burn those URR
Interesting.
and release the equivalent amount of euros back to you.
So that's how they make sure that one URR always equals 1 euro.
Right. It ensures that one-to-one peg is always maintained.
It's a closed loop system.
It is.
It's pretty clever.
It's pretty neat how they're combining these traditional financial concepts with this new blockchain technology.
Yeah, for sure. But I'm guessing there's more to it than just deposits and withdrawals.
There's a lot happening behind the scenes.
What kind of technology are we talking about here?
Well, this is where smart contracts come in.
Smart contracts.
Yeah.
Have you heard of those?
I've heard of them, but I don't really understand them.
Okay, so basically they're like self-executing programs that live on the blockchain. And they automate those minting and burning processes that we just talked about.
So it's all automatic.
It's all automatic. They operate based on predefined rules.
So there's no need for like manual intervention.
No need for someone to, push a button or anything.
Wow. So smart contracts are really key to making this whole system.
They're essential for the transparency and efficiency of the whole thing.
Okay, that makes sense. But how does StablR make money?
That's a good question.
They're not charging fees for minting or burning URR.
Right. Their revenue model is actually similar to a traditional bank.
Okay.
They earn interest on those euro reserves that they hold. So just like a bank earns interest on customer deposits.
Exactly.
Oh, wow.
It's like they've taken that traditional banking model
Yeah.
and brought it into the crypto world.
That's really interesting. And this no-fee structure. I mean, that must be really appealing.
Oh, yeah, especially for those institutional players dealing with these huge transactions.
Okay, so we've talked about the technology. Let's talk about the benefits.
The benefits of UR.
What are some of the key advantages?
Well, one of the biggest ones is the potential for faster and cheaper international transactions.
Okay, so like imagine a business wants to send a payment to another business in another country.
Right.
They could do that instantly.
With minimal fees.
And with very low fees.
Way cheaper than using the traditional SWIFT system.
Yeah, the SWIFT system that can be really slow.
And expensive.
Yeah, and expensive. So UR could really revolutionize international commerce.
It sounds like it. Are there any other benefits beyond just cross-border payments? Absolutely. ER could also provide greater access to financial services.
Okay.
For individuals and businesses that are currently excluded.
Excluded from what?
From the traditional banking system.
Oh, wow.
So think about people who don't have access to a bank account.
Okay.
Or who live in countries with limited financial infrastructure.
So EUR could empower those people.
It could give them access to financial tools and services.
That they wouldn't otherwise have.
Right. And it's all thanks to that underlying blockchain technology.
Yeah, the transparency and security.
Huge advantages.
I mean, every transaction is trackable.
It's all recorded on the blockchain.
It can't be changed.
Immutable.
Yeah.
Immutable.
So it's much less susceptible to fraud.
And that's a big deal.
Especially for businesses and institutions operating in the financial sector.
Yeah, for sure. So it sounds like URR has the potential to really reshape the financial landscape in a lot of ways.
It's a game changer.
It is, but like with any new technology,
of course,
there are risks.
Always risks. So let's talk about some of the concerns that people might have.
Yeah, let's get into the nitty-gritty.
Yeah. What should people be aware of?
Well, one of the biggest ones is regulatory uncertainty.
Regulatory uncertainty?
Yeah. StableR is regulated by the MFSA, but the crypto landscape is constantly changing.
Yeah.
And new regulations could really impact their operations.
That's true, and that must be a big concern for institutional investors.
Oh, yeah. They're used to operating in a very clear
Yeah.
and stable regulatory framework.
So all this uncertainty around crypto,
Yeah,
it could be a big barrier.
it could.
Another thing is liquidity.
Right. Liquidity is crucial.
What do you mean by liquidity?
So even if URR maintains its peg to the euro,
Okay.
if there aren't enough buyers and sellers in the market,
Wow.
it could be hard to sell your EUR quickly.
So you might not be able to get your money out.
Exactly. And that could be a problem if you need to access your funds quickly.
Yeah, that makes sense. What else?
Well, security is always a concern.
Security, yeah.
In the crypto world,
Of course.
I mean, the blockchain itself is generally very secure,
Right.
but there could be vulnerabilities in StablR systems
Oh, okay.
or with their partners or the exchanges where UR is traded.
So it's like a chain with a weak link.
Right. If there's a breach anywhere in that chain,
Yeah.
it could have big consequences.
So the stabler really needs to prioritize security.
Absolutely. They need to have robust cybersecurity measures in place and be very careful about who they partner with.
Yeah, and then there's credit risk.
Right? We can't forget about that.
So even if the euro is stable,
Mm-hmm.
if StablR has financial difficulties.
Yeah, or if they mismanage those euro reserves, it could impact the value of URR.
So that's why that real-time proof of reserves is so important.
It gives you that transparency and helps alleviate some of those concerns.
But it's still something that investors need to think about.
Yeah, it's definitely a factor.
Okay, so we've talked about the technology, the potential benefits and the risks.
The nuts and bolts.
Yeah, the nuts and bolts. But there's one more piece of the puzzle that we need to talk about.
What's that?
The human element.
Ah, the human factor.
Yeah, we can talk about all the tech specs and the financial stuff,
Right.
but ultimately it comes down to how people perceive this new form of money.
You get it. Adoption hinges on human behavior.
And trust.
And trust, yeah.
So let's explore that a little bit.
Let's do it.
Okay, so we've talked about all the technical stuff and all the financial considerations with the UR.
The nuts and bolts.
Yeah, the nuts and bolts. But now I want to talk about people.
Yeah, the human element.
Yeah, how do people actually feel about stablecoins?
Right, because at the end of the day,
Yeah.
adoption depends on people.
On people. Yeah, are they going to use it?
Exactly.
So what do you think are some of the biggest obstacles to people adopting stablecoins, like URR?
Well, I think one of the biggest hurdles, honestly, is just lack of awareness.
Lack of awareness, okay.
Yeah, stablecoins are still a pretty new concept.
Yeah.
A lot of people just don't know how they work or what the advantages are.
Right, they don't understand it.
Exactly. It takes time for new ideas to catch on.
Especially in the world of finance.
Especially in finance.
Yeah, it's like trying to introduce a brand new gadget.
Yeah.
People need time to understand it.
They need to see the benefits.
Yeah.
Before they're willing to use it.
So education is key.
Education is huge. Yeah. And then there's the issue of trust.
Trust. Yeah.
Crypto has had its fair share of scams and volatility.
Oh, okay.
So people are understandably cautious.
Yeah, they've been burned before.
Exactly. They've been burned. So building trust is essential.
So how does ERR address those concerns about trust?
Well, by pegging its value to the euro,
Okay.
it's offering a level of predictability and security that you
Yeah.
just don't get with a lot of other cryptocurrencies.
Right.
So the idea is to bridge that gap
Yeah.
between traditional finance
Yeah.
and this new world of blockchain.
So it's like a stepping stone.
It is, yeah. It's a way to ease people in.
Yeah.
Instead of saying, hey, forget everything you know about money.
Right.
This is the new thing.
Okay, cool. So awareness and trust, those are big factors.
They are, but there's also this whole other layer of psychology that we need to consider.
Oh, interesting. Tell me more about that.
Okay, so there's this concept called loss aversion.
Loss aversion.
Yeah. Basically, it means people feel the pain of a loss
Uh-huh.
more strongly than the pleasure of an equivalent gain.
Oh, that makes sense.
So even if stablecoins have all these potential benefits,
Yeah.
people might be more focused on what they could lose.
On the risks.
Exactly.
So how does that apply to URU?
Well, URU stability could actually be a psychological advantage here.
Okay.
Because by minimizing the potential for loss,
Mm-hmm.
people might feel more comfortable
Yeah.
using it.
Right. It's less scary.
It is. It's less scary. And then there's mental accounting.
Mental accounting. Okay.
So this is the idea that people categorize their money.
Like spending money and savings money.
Exactly. It's not just about how much money you have.
Yeah.
It's about how you think about that money.
Yeah.
So for stablecoins to be successful,
Yeah.
they need to fit into those mental categories.
So they need to be seen as a viable option for spending, saving, or investing.
Right. Because if people don't know where to put it,
Yeah.
Mentally,
Yeah.
they're less likely to use it.
It's not just about the technology.
It's not.
It's about how people think about money.
Psychology plays a huge role.
It's fascinating.
There is.
So we've covered a lot of ground today.
We have.
We talked about the technical details of URR.
Yep.
We looked at the potential benefits and the risks.
The pros and cons.
And we even explored the psychology.
It's a human element.
Yeah. Of how people might perceive and adopt stablecoins.
It's a complex topic.
It really is.
But it's an important one.
It is. I mean, URR is a fascinating example.
It is.
Of how people are trying to bring stability to the crypto world.
And bridge that gap between traditional finance and blockchain.
Exactly. And it has the potential to really change things.
It does think about faster cross-border payments, greater financial inclusion, new and innovative financial products.
It's exciting.
It's very exciting, but there are challenges too.
Always challenges.
The regulatory landscape is still uncertain.
Yeah.
Liquidity is a concern. And security is always a top priority.
Yeah, and we can't forget about the human element.
The psychology of money.
Yeah, building trust and understanding how people think about money.
It's all connected.
It is. So the big question is,
yeah,
will UR succeed?
Will it become the digital cash of the future?
That's the million-dollar question.
Or will it just fade away?
Only time will tell.
Only time will tell, but it's definitely a story worth watching.
It is, and it raises some really big questions about the future of money.
Yeah, like what does the future hold?
Yeah, what role will stablecoins play?
Will we all be using digital euros someday?
It's exciting and a little bit scary.
And it's uncharted territory.
It is, but that's what makes it so interesting. Well, that wraps up our deep dive into EUR.
I hope you enjoyed it.
I did. I learned a lot, and I hope our listeners did too.
Me too.
So until next time, keep learning.
Keep exploring.
And keep diving deep.
See you next time.